All right, so for those who are tuning in, Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Aliredha Walji. I'm a financial advisor with ShariaPortfolio. We are a full service wealth management firm that is based here in Lake Mary, Orlando, Sunshine State, Florida. And it is an absolute pleasure to be here with you guys. You've probably seen me in our prior sessions, but it's always a good chance and an opportunity for us to meet new people and see some familiar names tuning into these programs that we are doing. We hope that the information is beneficial for you and your families. For those who are new to ShariaPortfolio, I'll just give a brief introduction as to what we do. We help clients build customized portfolios to be able to help them achieve their financial objectives, whether you're looking to save for your retirement. A lot of people have young children and they want to make sure that they're doing a good job in terms of saving for their educational expenses. And one of the big goals that our community has is obviously also the topic of our discussion today, which is charitable giving. Alhamdulillah, the Muslim community is very generous in giving to so many causes. You've probably seen a lot of them on your social media feed coming up under Launch Good, the Masjid fundraisers that we do. So the objective that we had was to kind of create a seminar around that subject. And we'll talk a little bit about the program that will be happening today. But as you work, as you try and understand your financial objectives, our team is there. We have advisors from across the country that can work one-on-one with you. And in addition, we also have our ShariaPortfolio Canada team. So earlier this year, we got licensed to be able to work with Canadian Muslims. And through that entity, we are able to serve Muslims internationally. And then we also have our funds business where our team was fortunate and alhamdulillah, it's been a great success in terms of launching an equity-based halal ETF as well as a sukuk ETF. So for those who are interested in learning more, you can visit sp-funds.com and learn more about it there, or just on the ShariaPortfolio website. So that's enough about ShariaPortfolio. I'm sure you'll get to learn more about us as we move along. I am, again, a financial advisor, and I also help to manage our US operations. And today, you'll probably hear me talking less because we have a lot of well-renowned speakers and community leaders, as well as professionals in their fields. We'll give them a chance to introduce themselves, and we'll also give each person an opportunity to talk a little bit about their subject matter area of expertise as it relates to the subject that we will be discussing today. And again, for those who are tuning in, today's topic is going to be on charitable giving. What are the different ways that you can donate? Can you donate stock, or can you only donate money? How about if you want to do it in a planned manner? What are some vehicles? What are some mechanisms that you can do so in an efficient manner from a tax perspective, from a record-keeping perspective, and also what are the different ways and mechanisms in which nonprofits can benefit from this particular area as well? Because there are two ways, two sides to this. There is the donors themselves, which are individuals and families that want to donate money. And then on the other side, we have we have nonprofit organizations that are the recipients of this money. So how can nonprofits tap this area and get money for their organizations? And at the same time, how can they make use of those funds? Because nonprofits are also being held to a high standard. If a nonprofit organization is sitting on a lot of money, then it is the duty of the community to ask them to explain what is being used, what is the money being used for. And if they want to improve their donations, the transparency has to be there, of course. And so, some of the mechanisms we can talk about can hopefully help on that side as well. I think if panelists, whoever is not talking, can mute themselves, that might help. All right, so what I'm going to talk a little bit about now is introduce the panelists one by one, and we'll get an opportunity for each person on this esteemed list of panelists here to give a chance to give a quick introduction and then start off by talking a little bit about the topic from the perspective that Brother Yaser Ali may have prepared for us. And I welcome all the panelists to, kind of keep this interactive. If there is an area that you wish to help shed some light, we can always have you shed some perspective on that. And I also encourage the audience to submit questions either through the Zoom, question and answer section, or if you're tuning in through Facebook, you can definitely submit some questions there as well. So again, thank you all for joining us today. With that, I will turn this to Brother Yaser Ali, who is an attorney, and let him introduce his work, and then kick us off by talking a little bit about trusts versus donor advised funds and anything else along the lines of, how the attorneys might look at this and what his experience might be from the community side as well that might benefit those who are tuned in today. So please kick us off, Brother Yaser Ali, and I welcome everyone again. Thank you so much for joining us.
Assalamu alaikum wa rahmatullah, everybody. Jazakumullahu khairan for putting this really important program together. And it's an honor to be a part of this conversation. And I think it's important, as an attorney, what we do is we specialize in wealth planning. So we're thinking about the transfer of wealth from a person during their lifetime and then also upon their death. And so there's a few different layers in this conversation. There's, how do we make an efficient transfer of wealth? How do we do so in a way that avoids probate, in a way that is as seamless as possible, that's as tax optimized, that is Sharia compliant, because this is an entire area that, for another conversation about what does Islam require of me when we think about the transfer of wealth. And then how do we do so in a way that benefits the community and that can leave a legacy? So all of those things are questions that we address as an estate planning attorney. And today we'll focus on that portion of that legacy component, inshallah, about what that means. Do you want to go around to the panel, or do you want me to kind of spend a few minutes?
Actually, since you've done that brief introduction, that's great. I think it'll be good everyone to introduce themselves, and then you can continue the rest of the discussion that you had planned out. So the next panelist that we can have introduce themselves, Brother Arman Chowdhury. He's a CPA, and he's joining us from New York. Brother Yaser Ali is from Arizona, so we have good diversification in terms of representation as well. And I wanted people from different parts of the country joining us today. So Brother Arman, kick us off, tell us a little bit about your work, and then we'll turn it to Brother Walid after that.
Assalamu alaikum. So my name is Arman Chowdhury. Again, I'm based in Jamaica, Queens, New York. I am a CPA that focuses primarily on small businesses and individual that owns those small businesses. That's our specialty. What we focus on is small businesses that wants to grow quickly. So we look at mostly in profitability analysis and strategies to grow the businesses quickly. So aside from that, the main focus is also includes on tax planning for individuals. A lot of the business owners are high net worth individuals themselves. So we focus on how to maximize their tax strategies to reduce taxes, and also structuring their businesses in a way that's tax advantageous. So that's our focus. And then personally, I have been involved with a lot of nonprofits. In my personal capacity, I serve on the board of number of nonprofit organizations, Masjids, as well as charitable organization. So very familiar with the needs and processes of nonprofits, and we're here to help any way we can. Thank you.
Thank you so much, Brother Arman, for that lovely introduction. Brother Walid, you're up. please tell us a little bit about your work with Islamic Relief, where you're from, and what we hope to benefit from today, inshallah, when you'll be speaking.
Jazakallah khair. Assalamu alaikum wa rahmatullahi wa barakatuh. I want to thank ShariaPortfolio first and foremost for having me here. It's an absolute pleasure to be discussing this, something that's very important, especially within the Muslim community, something that's much needed. So my name is Walid Hamadeh. I'm the Southeast Regional Manager here at Islamic Relief USA. I'm based out of the South Florida office. I received my certificate in fundraising management from the Lilly Family School of Philanthropy. So in other words, it's a very fancy term for saying I'm a professional beggar, right? But alhamdulillah, it's a work that's very important, and it's a work that's very core to us as Muslims, right? When it comes to social service, when it comes to doing good for humanity. Because as we know, Rasulullah sallallahu you know, he taught us in the book of our holy book, the Quran, Allah subhanahu wa ta'ala says, "Kuntum khayra ummatin ukhrijat lin-nas," right? You are the best of people sent to mankind. And this is what our work really revolves around, right? Being the best to mankind, right? We're the best of nations sent to mankind, So, you know, at Islamic Relief USA, we work to really serve our neighbors. We work to serve the community at large, the international community, those who are in need, those who are in poverty, those who are in destitution, those who need a voice, right? But we can't do it ourselves. We need people just like you. We need our volunteers. We need our donors. And so at Islamic Relief USA, we understand that it doesn't just stop at regular fundraising, right? It has to go beyond that. And this is where planned giving comes along, right? This is where we understand that beyond just giving, we're here to also establish a legacy, not only for ourselves, not only for the organization, but for the community at large. And that's why Islamic Relief has a institution that we call Islamic Relief Waqf, right? And I had asked for a special guest of ours to actually join us today. He's responsible for Islamic Relief Waqf, and he is our endowment specialist. So inshallah, we can move on to him, Faisal Khan.
Thank you. Thank you so much, Brother Walid. And thank you for inviting Brother Faisal as well. Brother Faisal, if you can, it would be great to hear a little bit about what your role is within Islamic Relief. And then inshallah, as the question and answer session kicks in, and as we move along the discussion, inshallah, you know, your input as well as Brother Walid's will be greatly appreciated. So yeah, kick us off. Tell us a little bit about your role and you know, how Islamic Relief, you know, what their impact is and things of that nature.
Yeah, assalamu alaikum. I really appreciate the opportunity and the opportunity to listen and learn from you and Brother Yaser. It's always
nice background, by the way.
I was gonna say, Walid caught me. I'm in Virginia, so we only have a few more days of nice weather.
Snow kicks in, huh?
So I'm trying to enjoy it as much as I can't be indoors all day, man. I go nuts. But alhamdulillah, I manage the endowment, the Waqf for Islamic Relief. As you said, as you mentioned, Islamic institutions, when you know, donors give to the institutions that they love, the institutions have a responsibility to maximize and optimize what they're doing with those assets. Those funds are not always immediately deployed. And so we want to just make sure that we're maximizing the return on that while minimizing risk and obviously investing within a Sharia compliant portfolio. We're a young organization, we're a new organization, but I always, you know, look to the vision, the example of, for example, in our industry of the Red Cross. The Red Cross established their endowment in 1905. And now it is a over $1 billion institution. It's a $1 billion endowment. And in endowment best practices, the endowment typically can fund the parent organization or fund operations 4% without eating away at the principal. And so that's our vision is, you know, not 10 years from now, but let's say 30, 50 years from now, inshallah, when you're $1 billion endowment, you could feed the organization $40 million a year. And that's where Islamic institutions, not just Islamic relief, but Islamic nonprofits, that's the impact that they can have of building, universities, building libraries, building research centers, building think tanks, building hospitals. And that's the vision of the impact that the Muslim community can have in America, as the Muslim community has done in our heritage. And so we're just at the grassroots. So it's fun and exciting, but that's the vision. And so for our most loyal donors that have been with Islamic Relief for 10, 15, 20 years, they come to us and they say, we want to make sure that Islamic Relief is able to continue to do what they're doing even beyond our lives. And how can we make sure that happens? And that's the purpose of the endowment. That's the purpose for Sadaqah Jariyah opportunities for the donors, to make sure that their efforts are continued on.
Fabulous, fabulous. Thank you so much for that. And lovely. I think sustainability is a key point that you mentioned, because you don't want to be the professional beggar who begs all the time. You want to be, you want to reach a point where you've accumulated enough, and that you're in a situation where the growth of the portfolio is sustaining all the operations of the business, or the nonprofit, I should say. And always set a big goal. There's nothing wrong with having $1 billion as your goal. And as you mentioned, 4% rule, as they call it in the investment world, it's a very attainable goal. Even in Islamic investments in particular, we've seen tremendous returns in this space because of the value-based approach, and avoiding debt and things like that really helps Muslim investors do well in their portfolios. And same thing can go with the nonprofits, so whoever is listening in, that type of goal, if you're a nonprofit leader, set a big goal, have a plan in place, and inshallah Allah will make it easier for you. And if Sharia Portfolio can help in the investment strategy, we are here. That is our area of expertise. So thank you again for all the panelists for giving us a quick introduction about the work that you do. With that, I'll turn it back to Brother Yaser Ali and kick us off. The question and answers are trickling in. So if any of the panelists do get a chance to see some of these, great. If not, I will bring them up as we move along. And yeah, let's get started.
All right. Jazakallah khair. It's nice to see familiar faces and to meet new ones as well. Brother Arman, Brother Walid, mashallah, may Allah bless all the work that all of you guys do. Important work. I'm going to talk about, this idea of legacy and planned giving, and kind of at a high level, and then you can feel free to interject at any time if you want to jump in. Inshallah, I think, and then people can add questions to the box. But when we're thinking about the idea of legacy, remember we said when we're thinking about estate planning, we're thinking about owning our assets that we have, planning for them in such a way that we protect our family and we fulfill our religious obligations, and we leave a legacy. So today we'll only talk about this legacy piece. And what is legacy? Actually, if you look in the Quran, Allah subhanahu wa ta'ala quotes Prophet Ibrahim alayhi salam with the dua, وَجَعَلْ لِي لِسَانَ صِدْقٍ فِي الْآخِرِينَ. It's very interesting. That essentially, grant me a reputation that's honorable among the generations to come. So this question of how am I going to be remembered? What will, what loss will people feel when I'm no longer around? Yes, of course, everybody has a human loss in that sense, some loved one, but will people remember me? And remember me in a positive light, such that they will make dua for me, that I will continue to get some benefit after death. And we know the famous hadith of the Prophet ﷺ that, after a person passes away, inqata'a amaluhu illa min thalath, that all their deeds are finished except 3, and of those are sadaqah jariyah, right? That continuous charity, that perpetual benefit that you'll receive. And so that's what we want to think about when we think about legacy planning, is how can I do something in this world beyond just waking up in the morning, going to work, earning some money, spending it on my family, and then going to sleep at night, right? Can I do something that is more beneficial, that has a longer impact? This is what Islamic Relief's Waqf is about. This is what sustainability of Islamic institutions is about. So how do we do that? So there's the institutional side. I'm not going to touch that part. I'm going to just talk about the individual side, at least initially. There is the way that we do most of our fundraising. You know, mashallah, Ali, you mentioned the Muslim community is super generous. But most of what we do is Brother Walid's got to go ask people for money, stand up after Jum'ah, or do webinars nowadays, right? And then people give. And mashallah, they give a lot. But that's not what we're talking about today. That's not planned giving. I mean, it's planned in the sense that you plan it and you give it, but it's not what is defined in our world as planned giving. When we're thinking about planned giving, we're going to think about 3 different types of gifts. So one is a non-cash gift, right? The first basic thing is I can give something besides cash, right? I can give stocks, I can give land, I can donate assets. And that's going to get us a better tax advantage that Brother Arman is going to, I'm sure, you know, be able to assist with, you know, but I can optimize the benefit of my giving, both to the institution and to the donor. So that's level 1 of planned giving. Level 2 is how do we utilize an entity? It could be a foundation. It could be a donor advised fund. It could be a charitable lead trust. How do we utilize some tools that will provide more benefit and structuring, such that maybe I can give distributions over time. Maybe I can take some income. So I donate something, but I continue to draw an income stream, or vice versa. I set up something where there's income going in a charitable remainder trust, you know, to an annual distribution to family, and then the rest to the charity, or an annual distribution to charity and the rest coming back to my family in a charitable lead trust. And so there's all kinds of opportunities in this world that I think our Muslim community, you know, Brother Faisal said our endowments, our awqaf are very nascent. They're just starting up. And so too is the world of planned giving. I mean, if we compare ourselves with other faith groups that are, you know, maybe as generous or probably not even as generous, frankly, we're just not operating that level of sophistication that we can be. And this is just, you save money, right? You're going to give money to the government. Let's try to utilize it in a way where we can do so. So we can set up, like I said, donor advised funds. Maybe I'll just mention them at a high level, and then if you want, we can go into more detail. But just so you know what these words are, we can utilize things like donor advised funds for coupling donations. We can set up family foundations. A lot of times people think, you know, the Gates Foundation or Clinton or Trump Foundation only for like billionaires. And that's not true, right? We can set these up at smaller levels for families, and they can be beneficial. Particularly one of the use cases we see a lot is when people give to organizations overseas. That they aren't getting any deductions for. This is potentially one way. And there's a lot of other benefits as well. And then, like I said, there are 2 types of trusts, a charitable remainder trust, and in particular, a charitable lead trust, which I think is a really, really valuable tool that we should be utilizing, especially for folks who are giving annual donations consistently. You have a pledge, whether it's a pledge you made or just a pledge you have in your head that I'm going to give, you know, this much every year to Islamic Relief. I'm going to give this much to my masjid. I'm going to give this much to my other charities that I like and I care about. A charitable lead trust is a very, very useful vehicle for doing that, and one that allows you personally to get a lot of benefit from a tax strategy perspective as well. So that's one that I would recommend that we consider. And then the last component of planned giving is giving upon death. And so here it's bequests. And this is a really, really important one. If we think about our tradition, you know, within the sadaqah jariyah, you know, we're allowed as Muslims to give up to 1/3 of our wealth in a discretionary distribution. That's that wasiyah component. So if I'm allowed to give up to 1/3, there's a lot of families where, you know, mashallah, especially among immigrant communities where, you know, people may have came with very little and Allah subhanahu wa ta'ala has blessed them with so much, such that whatever the children are going to inherit, it's going to be somewhat extra. And so let's utilize that 1/3 component to build these endowments, to leave charitable bequests inside of wills and trusts. And we haven't even talked about, you know, if there are high net worth families or families that are going to be subject to estate tax, this is another way to save money that otherwise would go to the government anyways. So you earn the sadaqah jariyah and the reward, and you save on taxes. You know, it's obviously the best of both worlds, if you will, subhanAllah. So that's the other component of planned giving, is how do we structure within our estate plans, within our wills, within our trusts, gifts upon my death that will benefit, and inshallah for perpetuity benefit our institutions, our organizations, our masajid, etc. So that's kind of the very high level overview of planned giving. I'll pass it back to you and to the panel, and happy to jump into more detail as well if you'd like.
Yeah, thanks, Brother Yaser. I think that's a good overview, which kind of gives a good idea as to what the different options someone could consider. Now, again, we can keep this more high level because, again, what might work for one family may not necessarily be what might be ideal or suitable for another family. So one question that often comes up is why would someone consider a trust versus whether it's a charitable lead trust or the charitable remainder trust versus doing something like a donor advised fund? When is the sweet spot differentiation, or is it mainly to do with the cost that might sway someone to consider one versus another, or is it based on the scope of what you're trying to achieve that might influence one to consider one over the other? So what, in your experience, what have you found to be beneficial and at what level?
All of the above. I mean, I think.
So if someone has, let's say, annually they give about $10,000.
Yeah.
Okay. Would you tell that person to consider doing a trust for something like that, and set it up so that it's like a family foundation or something that's in perpetuity? Or would you recommend, to do a donor advised fund? Because as far as, what we've seen is the donor advised funds are generally very easy to establish, less administrative burden, and it's a more straightforward, seamless process. We use, by the way, for those who are tuning in and have not worked with ShariaPortfolio before, we worked with TD Ameritrade as the custodian, and they generally can work with organizations such as Renaissance Charitable Foundation to set up these donor advised funds. And that's what the individual donors can set up. And then we can facilitate the donations to any nonprofit such as Islamic Relief or any mosque or other organization of your choice. So from what I've seen, the donor advised fund process is generally seamless, easy to set up and get going. But at what point would you say, perhaps it's probably a better idea to do something like a trust? Is it, so you can kind of see where a client coming in has these questions in their mind, and what are your thoughts about something like that?
Yeah, so that's if you want to think about like kind of staging or step 1, step 2, step 3 type of thing, right? So donor advised fund, let's kind of simplify it, right? It's I like to describe it as kind of like a sadaqah jar, right? So you're going to put your money in this donor advised fund. You're going to take your deduction today. And that's the beauty of it. It can slowly be distributed to the ultimate charitable beneficiaries. So it's it's an excellent tool for tax planning at the end of the year to couple donations. Say in the $10,000 example you gave, if a person's not itemizing, well, maybe they want to put 2 or 3 years worth of donations in this year because they're having a better year, or it'll drop their bracket down or something, right? And
right.
They take the deduction, and then they know they're going to give this much in the future anyways, like you said, on an annual basis, and we just spread it out over the next few years. So it's a tax planning tool, which is great. Very, very easy to set up. It's wonderful. The limitations on that are kind of what you said. You're limited to certain types of investments, and often the challenge is getting the Sharia compliant investment option, right? But you're limited to, public equities and stocks and such. When would you want to enhance that to a foundation? Like, what's the threshold? And there's no particular number, but a few things that would jump out to me would be, if you want to do things besides invest in the market, right? So you want to have real estate that is owned by this foundation. Well, then the DAF is limited in that sense, right? If you want to if you want to be able to deduct donations that you make, this is probably the one that we see the most. You want to be able to deduct donations that you make overseas. And I don't mean give money to your brother and take a deduction and get in trouble. Like, I'm not talking about that. I'm talking about charities that are not registered in the US. So the DAF is limited in who it can give to. It's got to give to US
501c3.
Right. But the foundation has a little bit more flexibility in what it can do. Now, there's obviously compliance work, and there's a lot of diligence that has to take place, but there are opportunities there, especially for folks who tend to give a lot of money overseas, to be able to utilize the foundation. Similarly, another reason why foundations are utilized, if you want to get your family involved in philanthropy, you want your kids to be part of the process, beyond simply just writing or sort of logging in and saying give $5,000 to Islamic Relief. Like, you want to actually have a contemplative process. You want to give grants. You want to do scholarships. Those kinds of things. That's going to be one of the reasons why, particularly scholarships is a good one. So there's more sophistication that's going to be warranted if you want to utilize a foundation, but it's not so prohibitive. Like, it's not only for billionaires. You don't need to fund it with millions of dollars for this thing to work. There's an annual tax return. There's more fees. There's annual, there's compliance in a foundation. So you have to be willing to pay for, and there's startup costs, right? So there's, thousands of dollars more that it costs as compared to a donor advised fund. But the benefits, if you're looking for, unique opportunities, are going to be greater there. So that's going to be the distinction between the two. And then on the donor advised fund, on the charitable lead trust, the use case is going to be in those first two scenarios, foundation or DAF, you never get the money back. So it's irrevocable. Once you put it in, khalas, it's done, right? Like, it's not coming back to you. But in a charitable lead trust, the beauty is you take your assets, you donate them, you take the deduction, you invest them, you grow them, you donate them on an annual basis, and then whatever's left at the end of the term comes back to you. And so that's the beauty, is you can use it as an investment vehicle, sort of like a sort of quasi super retirement account as well, because the assets are growing tax-free inside of that trust. You make distributions annually, or you can get really creative and do them all at the end. But then at the end of the term, we set it up for 5 years, 10 years, 20 years, or for somebody's life. Then whatever's left can come back to you or to your family or to your kids. So it's a really, really, I would say it's kind of, it's very effective, but it requires more coordination with the CPA, and it requires just a little bit more savviness, but it's a very useful tool for folks that give a good amount every year, and who have money, particularly in an investment account, that they could transfer into this trust, because you do need to have an upfront donation that's pretty sizable in that trust.
Fabulous. Thank you so much. I think that does help, because I think that's a common question that comes up with some folks who are trying to debate what route might make sense for their situation. And while there is no, a specific dollar value that's the cutoff point, I think it does help to give the perspective in terms of the opportunities that are different between one versus another, as well as the type of investments that are possible under one umbrella versus the other. In any case, there is a lot of tax savings benefits in those things, and I think that kind of gives us a good segue to talk a little bit about the tax savings angles, because a lot of people, alhamdulillah, also in the Muslim community, are not just generous, but we are blessed to see almost every other Pakistani doctor or Arab physician as well, or outside of the medical practice, there's a lot of business owners, as Brother Arman said, he works with a lot of them. Or even in the tech space, a lot of people end up getting company stock, right? Because that's, you know, when you work for a lot of the big name FANG type companies out there, Apple, Google, Facebook, and all these names, they often give as an incentive to their employees some company shares. And what that helps is provide an opportunity for them to think about how they want to take that money. And in some cases, I mean, if you have hundreds of thousands of dollars in company stock, and in some cases even millions of dollars, I've seen some folks who, if they don't plan well and they take that money out, you know, you're going to have a hefty tax bill that year. So there are some opportunities with these trusts that can help them. So maybe you can shed some light in terms of ways in which these individuals can benefit from tax saving strategies. And from your experience, what are some general tips that you can share with those who are tuned in today as well? So Brother Arman, it's up to you to give us the guidance on the next phase of this discussion. And again, whoever is submitting the questions, I see the questions, we'll address a few of them, inshallah. So feel free to keep submitting those as the program goes along.
Thank you, Jazakallah khairan. Again, assalamu alaikum, everyone. So let me start with the first saying about the last tax bill. So the last major tax bill was passed in the late 2017, which got impacted mostly in 2018 and so on. So a lot of the changes in that major legislation, and I'll go through a few of them to kind of set up the, my discussion. But I also want to, have you be mindful that if a change in administration comes in 2021, there is a high possibility of major changes in the tax law again, right? So if the Democrats win the House and the Senate, there is a chance of, very high chances of major changes. So keeping all of that in mind, in the last tax bill, which is called Tax Cuts and Jobs Act, the itemization was greatly reduced. Your standard deduction went up to about $24,400 for married couple. And then the property taxes, the state and local taxes, what we commonly call SALT, that cap went to $10,000, which made it very difficult for a lot of people to actually take itemized deduction. If you don't have a home that has mortgage, generally it's very hard to itemize these days. So keeping that in mind, and I want to connect that with what Brother Yaser Ali mentioned about the Donor Advisory Fund, right, DAF. So when we advise people, we tell them, if you want to lump up your few years of charitable givings into 1 year, you may be able to take advantage of itemized deduction for that year. And then that might be a good tax strategy, when you plan it out. So that's number one thing. Number two thing that I would suggest everybody, that's anybody that can afford to max out on your retirement plan. So most of the 401k type of plan that's out there, either 401k for people that's working in the for-profit industry versus 414 or 403b plan, whatever your company allows, you should max out on that contribution. That is a tax deferred a strategy to save for retirement, and very good strategy to reduce your taxable obligation. If you do not have a employer-sponsored retirement fund, you should, donate. You should contribute to an IRA account. Max it out there as well. Generally, if you're over 50, you can contribute more than under 50 age. And then the third thing that I would say, consider converting your traditional IRA to a Roth IRA. And very briefly, the difference is a traditional IRA, you pay income taxes when you retire and start withdrawing from that IRA fund. And a Roth IRA, you pay taxes upfront, and on your retirement, you don't pay any taxes from that Roth IRA distribution. But again, it depends on individual situation. So you need to consider it, but may not be a good fit for everybody. For a year like this, 2020, 2020, where the stock market went through wild swings, you may consider taking some stock losses to offset capital gains. Individually, you can take $3,000 net losses every year. So if you have gains, you should consider, offsetting them. If you have losses from prior years and you have gains from this year, that might be one thing you want to take a look at it and actually realize it. Now, just keep in mind, even if you have paper gains, it's not a taxable event. So for you to have a taxable event from a stock perspective, you have to have the transaction done, meaning buy and sell both has to happen. Then I would say also look for tax-aware saving strategies. So people that has, or couples that has income of more than $200,000 or $250,000, if you're married filing jointly, there is a 3.8% net investment income tax. So there are some tax-free municipal bonds and other tax-free investment vehicles that you can take advantage of to reduce your taxes. And then also fund 529 education savings plan. Now that's the money you put in for your child's education. There's a lot of difference of opinion in terms of whether it's a good strategy or bad strategy from a college financial aid perspective. But in terms of savings from a tax perspective, it is a good plan to have it on. Aside from that, healthcare, another option, you have HSA plans or FSA plans that you can contribute and have a tax savings from there. And then finally, charity, giving to the charity, that is itemized that you can do, and there's a huge savings on that as well. Now, with that, I would like to kind of point out a few things about the donor advisor fund. So for high earners, high income earners, a DEF would definitely increase your tax savings. So good thing about DEF is it usually works, and I want to take the question posed before about $10,000 annual contribution or annual charitable givings, right? So if you don't know which charities you are giving, but you want to give, DEF is a fantastic way to move forward. You put the money there, and you can decide. So you take the tax deduction right away, and you can advise later on to say, give it to Islamic Relief, or your local masjid or somebody else, and you can spread it out that way. Also, you can create bigger events where you can bundle up 3-4 years of donation into 1 year, and you can take deduction from there. So when you donate from a charity like that, you can take deduction up to 60% of your adjusted gross income. So if you're donating cash, which in a general sense means cash or check, the 60% of your AGI you can take upfront deduction in the current year. And for securities and other appreciated assets, right? So anything stock or real estate that has appreciated in value, you can go up to 30% of your AGI. And then the remaining amount, so if you have any unused portion, that you can carry forward 5 years. So up to 5 years, you can go forward and claim it. So I'll give you a simple example. Let's say your adjusted gross income is $100,000, and if you donated $70,000 in the current year, if it is cash donation, you would be able to take up to $60,000 as a deduction. If it is stock, you'd be, and with an appreciated stock, you'll be able to take up to $30,000 as a donation. So the remaining amount, the $10,000 in the cash case and $40,000 in the appreciated asset case, you will have 5 years to take them. Second thing is on the donor advice fund, if you have any capital gains taxes, you will incur no capital gains on the appreciated gifts, right? So anything that you put in the donor advice fund, any kind of appreciation will have no tax impact on you. The DAFs are not subject to state tax, so that's another benefit. And then it also helps you alternate minimum taxes. So AMT, if you are impacted by AMT, the donor advised fund does help you with that. That is pretty much all I have. Donor advised fund definitely can take the full value of current market value of any assets that you contributed. And again, that could be closely held companies, real estate, and any stock as well. So that is pretty much I have.
Thank you, Arman. I appreciate that. I think that's a good kind of overview in terms of how people can take advantage of the donor advised fund, but also the transfer to their retirement accounts. I think that's a very important point. Some people are not aware that they have up to 19,500 for 401ks, or if they have additional options, there are some kind of plans called defined benefit plans, for example, for self-employed individuals that IRS allows them to defer up to, what's the limit on that, Brother Arman? Is it 230 or something thousand?
Right. So usually you'll have a third-party administrator looking at the census of the company. So because they have to kind of look at that, and then age and many factors, but it can go up to 230.
Up to 230,000 in some cases. We have clients who are really taking advantage of that in their retirement accounts, because 401ks can be limited in terms of how much you can put in. So just as a side point to add to that, but I think when you combine charitable giving with retirement planning, those are two very powerful mechanisms to help reduce your taxes. And thank you for shedding light on that. I would like to point out that unfortunately 529 plans, due to the nature of the fact that they do not allow flexibility with the investment choices, are generally not considered Sharia compliant. However, there's an article in our blog section that I wrote about that covers other alternatives, UTMA accounts, which are generally good alternatives that some clients can consider, though the tax savings differences are a little bit different between those two. It still has some benefit, especially from an estate planning perspective for some of the high net worth individuals, because each year people can put in a couple between a husband and a wife, for example, they can do up to $30,000 and avoid having to do the gift tax filing, right?
Correct.
So that's another tool that people have available, but just wanted to point that out as well. So thank you so much for a couple of the questions since are on the DAF. I see that have come in. The DAF has to be going to registered 501c3 organization. So that's the requirement. If you're looking to donate overseas organization, as Brother Yaser Ali mentioned, you can do that certainly with a trust, because that gives you that extra flexibility. There's obviously due diligence that will be needed to be done, but that can be possible through that mechanism. Beautiful that up to 30% AGI, with regards to appreciated stock. As I said, if you're getting company stock, or if you have a taxable account, I've seen a lot of clients' portfolios, though the market has been a bit quite interesting this year, we still have a lot of people with good gains. And that's a mechanism of a lot of our clients have been able to benefit by transitioning some of their appreciated stock to the donor advised fund or charitable accounts, so that they can bypass or avoid having to pay those capital gains taxes on the realized gains if they were to realize them. So thank you for that again, Brother Arman. A few of these other questions we will address later once I get the opportunity to Brother Walid to give us. I know you talked a little bit in the beginning, but if you have a couple more minutes to share, so that I can allow about 10 minutes for Q&A before the hour is up. Brother Walid, anything else? Or Brother Faisal, if you want to shed a couple more points on Islamic relief work, then we can jump onto the Q&A.
Alhamdulillah, our name, we're pretty well known in terms of what we do with our programs. And I'm sure, a lot of our viewers have seen us come through, have gotten our phone calls, have talked to us one-on-one. But I think to really add value to our viewers, especially for the topic of planned giving, I want to pass it off to Faisal just so he can, talk a little bit more with regards to planned giving from Islamic relief side.
Fabulous. Brother Faisal, if you're still there, please feel free to jump in and shed a couple more minutes on the work that Islamic Relief is doing from the perspective of planned giving and how you connect the donor side to the nonprofit side and how that mechanism works for your organization that other organizations, inshallah, can benefit from as well.
Yeah, I appreciate that. I appreciate the time. To be honest, our responsibility, our mandate at the endowment is to manage the portfolio of investments for the long term, to maximize return, minimize risk, Sharia compliant, like I said. And my recommendation to other organizations that are getting involved in endowments or building their endowments is to work with professionals in the field. For example, if you ask me how we're getting involved in planned giving, what we're doing is we're building relationships with experts in the field like Brother Yaser, right? When it comes to managing portfolios, we work with organizations like ShariaPortfolio, right? What my recommendation would be is don't try to be a stock picker yourself. Even ourselves, we are a very small organization. We have a small investment team. We primarily invest in funds and in money managers that have had a history of success. We don't try and build a portfolio of stocks or investments or direct investments individually ourselves. We let the professional money managers that have more time to do the due diligence and have more of the team and the infrastructure set up. Same thing when it comes to estate plans, writing wills, writing legal documents. What I'm gonna do is I'm gonna work with the right institutions that can do that for our donors. These are very complex, transactions and relationships, and it's not something that unless that's something you're doing every day, all day, I don't recommend getting involved in that. So, find the right organizations, find the right people that you are comfortable working in that represent you well, and we'll form great teams together, inshallah.
Thank you so much again for that quick recap as to the relationship building. It's very important to have strong relationships because to reach further heights, you can only do that as a team. It's not a one-man show, as you can imagine, especially with the responsibility and the scope of the work that a nonprofit is involved in, especially a large organization like Islamic Relief. You have to have differentiation of duties and responsibilities, and those relationships can really help you guys build a strong foundation for many generations to come, inshallah. So going to the Q&A session here, since we have gotten a chance to learn from all the panelists, I just want to, in terms of the charges, obviously that's a question that came in the beginning. I think the charges will depend on the scope of what you're trying to accomplish with regards to the entities and the foundation and the work that needs to be done. But as you heard from the Yaser, it is a bit more costly if you want to go down the route of endowments and trusts versus the donor advised fund route. And we can always discuss one-on-one with the right individual depending on the question offline. Let me look and see here. If anyone wants to re-examine their trust, of course, the attorneys are happy to review that and give you their feedback based on their services. Brother Yaser Ali, though he's licensed in Arizona and set up there, he does work with, investors and families across the United States. So you're welcome to get in touch with him if you need his help on, trusts and wills and things of that nature. If someone has a 501c3 family foundation to which they contribute on an annual basis, should they be also considering any other trusts? So Brother Yaser, any thoughts on something like that?
Yeah, so one thing we didn't talk about, and perhaps it's not talked about because it's not relevant to most people, but it's important to note, I guess, is the estate tax question. So right now, the federal estate tax is 40%, but it impacts very, very few people. because there's a 11.6, roughly $11.5 million exemption per person. In other words, if you have less than $11.5 million, your tax is 0. If you have more than $11.5 million, your tax is going to be 40% above that, right? And so for clients that have taxable estates, and some states, especially in the Northeast, a few states have state estate taxes as well, then some of this stuff, there's another dimension, is we want to save estate taxes, not just income taxes. So that planning, there would be reasons to consider other tools if somebody is estate taxable. Now, that number is going to drop down to 6 million in 2026.
5 million. Yeah.
Adjusted for inflation, like
Right.
Call it 6.
Yeah.
But the Democratic proposal is something around 3.5 million. So it's possible that that number would drop significantly much sooner if there's a turnover in Congress and the presidency. And one of the things about the exemption is it's use it or lose it. So if somebody has a number between 3.5 and 11, and they use the exemption now, then the IRS isn't going to come back and take it away from them. But if they don't use it, then they're going to be stuck with the lower exemption amount. So I know that's a lot, but it's just something to flag. If someone's in that range of a net worth of, 5-6 million to 10-15 million, somewhere in that large range, you may want to consider thinking about this, because most of this would likely need to be done by December 31st, assuming there's a turnover and there's a change in the law next year. Hypothetical, Allahu alam, nobody knows anything about the future, but I just want to put that out there. So if that's the case, then absolutely you'll want to think about other tools. But even if not, I mean, the other thing with the charitable lead trust, the other time that it's very good is if you're having a better than average year. So if you're normally making, $100 a year, and this year you made 200, well, the charitable lead trust is probably a great tool because you can put that money aside. So if you're having a better than average year, I would say consider a charitable lead trust. And besides that, yeah, I mean, obviously, you can maybe fund more than you usually do or things like that. Also, if you're selling a company, you may want to consider tax planning strategies, including a charitable remainder trust or other types of trusts. There's so many different kinds. But if you're going to sell a business, you may want to consider in advance different tools that could be utilized there as well.
Got it. Thanks for that. So in terms of the trust, like I said, it's not going to be a one type of trust. It's going to have different layers to it. There's different considerations. So just keep those things in mind. Let me see here. By the way, for those who did not get a chance to get the earlier portion of this segment, the recording will be sent out to the participants, and we will also have availability of this on our website in the media section, ShariaPortfolio.com. On the media section, you will find this uploaded, inshallah, in the next few days once we've saved this recording. So again, don't worry if you did not get a chance to attend the whole event. So what other question do we have here that we can address in the next couple of minutes? Brother Yaser, I think a lot of these are trust related. So do you see anything else that might help?
I would say that, so this sizable, what's the size of investment in the lead trust? I think I would throw out a number here. I would say if somebody has 100,000 that they're willing to put into the trust in year one, okay? Now, I wouldn't give that number for the foundation, but for a lead trust, because in order to get the benefit, you need to set it up for a number of years. And so you want these assets to grow and you want to make distributions on an annualized basis. And so the ideal sort of client is going to be one who has a bunch of cash in an investment account that they don't need to dip into. Because the challenge is for that duration, you can't go get that money back. So if you set it up for 10 years, there's no way to go in and because you're taking the deduction up front. So that's going to be I would say, just because there are startup costs, and I know everybody wants like hard numbers, I would say, there's fluctuate all over the board, but minimum is probably something like, you know, 3 to 5K to set these up. But numbers vary all over the place, just to give you a consideration. The other thing about the lead trusts is they're based on the AFR. The deduction is based on the AFR, which is a federal, a number that the government, sort of the interest rate that the government releases every month. And so the rate is so low right now. This has nothing to do with riba, but it's just, that's what you're using to calculate the deduction. And because that number is so low, this is actually one of the best times to set these trusts up. So there's no interest involved in the transaction. It's simply you're using that number to calculate the discount on the present value. So that's something to consider. State tax deduction for couples is double what it is for a individual.
We've done a pretty good job in covering a lot of the high level points in terms of costs and other things, or, you know, specific, you know, areas that could be a discussion one-on-one.
Yeah.
But I mean, we really do appreciate you all tuning in. We did try and address some of the questions live, but a lot of them, Brother Arman has been kind enough to type out the responses on the tax saving side of things. For those who are just new, Sharia compliant bonds, you know, if you haven't heard of this term, there is something called sukuk, which are asset-backed products. You're earning dividends on those, and they are halal sukuk that you could use as an alternative to bonds. So just to educate the community, and you can check out our blog section. We have some articles on that as well. And if you want to look at an ETF that was available for investors who want to own it in their portfolios, you can look at SPSK as a good choice in that category. Otherwise, you know, I think the journey, you know, where do you go from here? For those who are interested, whether you're a nonprofit organization or an individual, it all starts with a discussion with a financial advisor. I think the role of an advisor is to give you unbiased expertise and give you an honest feedback as to what you could consider. So if you are an individual and you're trying to kind of wrap your head around what should I be considering? I've made enough money, alhamdulillah, my income has been growing. What are some tools that you would recommend as my advisor? And, you know, with the help of the different resources that we have on this panel and you know, others, we can always make those recommendations for your particular situation. And make sure you take advantage of those tax savings opportunities that are available, especially regardless of who wins, by the way. I think whether the Democrats win the elections or the Republicans, I've seen a lot of, you know, inclination from a lot of different sources that taxes are likely going to go higher because of the stimulus and aid that has been provided. They have to recoup this money somehow, and it's likely that they're going to have to increase the taxes to make up for that. So it's always wise to be smart about your money and factor taxes into that. So as an individual, we have recommendations that could work for you. You can always schedule a consultation with us on the website. And then on a second note, if you're a nonprofit organization and if you're listening in, you know, my recommendation also for you will be to think about, you know, what are your goals for the funds that you have already collected? And if you're still in the process of raising money, maybe you can have a portfolio that is dedicated for more long-term growth, and maybe a separate portfolio could be set up where you are looking to tap that for income over, you know, every few months or maybe every few years. You can say our goal will be to withdraw X percentage from this account and maintain the principal balance. So that's an area that our team can definitely help you. We have a good amount of experience working with nonprofits on planning around, you know, growing their endowment in terms of the growth phase as well as the distribution phase. So feel free to connect with us on that to discuss further. And finally, you know, what I will hope that you will leave this discussion with today is that this is a learning experience. You know, there is not going to be all the answers up front, but we have the tools, we have the mechanisms, and it all starts with a dialogue, a discussion. So if you have not had a chance to speak with an attorney before on any of your living will or trust or charitable giving mechanisms that you might consider for your family. It's not a bad idea. You should start now. You know, it's never too late. And on the other hand, if you've never had a chance to work with a financial advisor, then our doors are open and we're more than happy to speak with you. And likewise, if you need the help of a CPA for your business, you know, Arman and his team can take care of you and your needs. And then Islamic Relief does great work. I mean, you know, if you're living in the US or internationally, you've probably seen their efforts, relief efforts across the world and the impact that they are having and the dawah work that as a result of that. So thank you for all the work that you guys do. Brother Salahuddin, if you don't mind, you know, just put up the last slide with our contact information. And if we didn't put the disclaimer slide, we always put that up as well. So you can do that. And then with that, thank you all again once for joining us. We plan to have more of these kind of events in the future. So if you have suggestions on what you wish for us to do in coming months, please do let us know, and we can always plan additional topics for you and your family's benefit. So, you know, that's all I had from my side. We always put this disclaimer in all our webinars, so you're welcome to look at this. And finally, you have a contact slide for us. So if anyone wants to contact us, that is my contact information. Please feel free to reach out to me. If you need to give me a call or send me an email, please feel free to do so. Finally, thank you again. I pray for you and your family's safety. I know we're still in COVID world, so please take care and practice the social distancing and all the measures that are out there. We pray that we have a vaccine soon. And take care for you and your families. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam.